Good morning, good afternoon, and good evening. And thank you for taking the time out of your busy schedule to join us today for our first International Sustainability Standards Board webinar. We're delighted to introduce you to our first standards currently out for consultation. My name is Mardi McBrien, and I'm one of the team here at the IFRS Foundation helping to set up the ISSB. And I'm joined today by Sue Lloyd, Vice-Chair of the ISSB, and two technical leads for the development of the standards, Ravi Abhivardhana and Brian Easterly. Sue will set the scene for us, starting off. Will then be followed by Ravi, who's going to talk to us about the general requirements exposure draft. And then Brian's going to come along and give us a really good run through on the climate standard. But before we get started, a few quick housekeeping matters. The recording and slides from this session and the second session later today, the session from earlier, this is our second session, will be available on our website tomorrow. We will be taking questions as we go and at the end, so please place them in the chat and I will do my best to address as many as I can. And lastly, whilst you're at your computers and listening in, pull up on the other screen next to you and type in ifrs.org/sustainability, where you can register to receive regular updates on our work and opportunities to get involved directly into your inbox. So without further ado, please join me virtually in congratulating Sue on her appointment as Vice Chair of the ISSB and welcome her to the floor. Sue, over to you.
Thank you very much, Mardi. So moving to the first slide and setting the scene, particularly for those of you who aren't familiar with the IFRS Foundation. So the IFRS Foundation was set up in 2001. And its mission was to develop accounting standards to bring transparency, accountability and efficiency to financial markets around the world. It did that through the International Accounting Standards Board, which has been very successful in resulting in global comparability of accounting around the world, with the standards used in more than 140 jurisdictions. The new board, the ISSB, is essentially a sister body to this Accounting Standards Board and has the same mission: transparency, accountability and efficiency through global comparability. Moving to the next slide. So how do we end up with a new Sustainability Standards Board? Back in 2020, our trustees asked stakeholders about sustainability reporting because we knew that investors were increasingly interested in this information. And they asked really three questions. Is there demand for a set of global sustainability standards? If so, should the IFRS Foundation play a role? And if they should play a role, what role should that be? And the overwhelming response we got from around the world, with over 750 comment letters, just to give you an idea of how much interest there was that we should have a global sustainability standard setter and that the Foundation should take the lead, setting up a sister board to the International Accounting Standards Board to set sustainability standards for investors. So moving to the next slide. So the establishment of the board was announced at COP26 in Glasgow last November. And on that day, a couple of other important announcements were made. The second announcement was that when the International Sustainability Standards Board is established, it wouldn't start with a clean sheet of paper. We'd benefit from a consolidation exercise. Those of you familiar with the sustainability space will have often heard, I'm sure, the term alphabet soup being used to describe the current or former sustainability reporting landscape, with so many different bodies and acronyms involved in setting requirements for the market. So through the establishment of the ISSB, one of the things that the Foundation is seeking to do is to reduce the complexity of that market by consolidation. So in January this year, the Climate Disclosure Standards Board was consolidated into the Foundation. And by the end of June, we expect to consolidate with the Value Reporting Foundation. And the Value Reporting Foundation brings with it the SASB and its standards and the Integrated Reporting Framework. In addition to the consolidation that was announced at COP26, we were also really excited to publish on our website two prototype documents, a set of general requirements and climate disclosures. And those prototype documents published back in November actually were the precursor to the exposure drafts that we're going to talk about today. Moving to the next slide. So what is the focus of the ISSB? To set the scene for what these exposure drafts are all about. So the ISSB is focused on meeting the needs of investors. Our task is to develop standards to establish what we call a global baseline of sustainability disclosures for investors around the world. We want investors to have the benefit of improved transparency and comparability of information about sustainability risks and opportunities. I talk a lot about investors, and you'll hear us talking about investors through this presentation, but it's also really important to point out that it's not only investors who would benefit from a global baseline, it's preparers, companies as well. What we want to do is streamline reporting so that if you report in multiple jurisdictions, you can use a single set of requirements around the world to meet investors' information needs. In addition to using the term the global baseline, when we talk about our mission, we often talk about the building blocks approach. And on the next slide, I'll try and explain what we mean by the building blocks approach. So the work of the new board, the ISSB, is represented in this diagram by this big red square in the middle of the screen. The ISSB is focusing on providing sustainability-related financial disclosures to meet investors' information needs. Now, investors don't only want sustainability information, of course, they still want to use the financial statements. And so the work of the ISSB is very much about providing information in conjunction with the information in the financial statements. You can see that on the bottom dark grey corner. And it's worth noting while we're on this slide that while we have the benefit of the ISSB being the sister body to the International Accounting Standards Board, which gives us the opportunity to really make sure that our standards work really well with the international accounting standards, the ISSB is setting its requirements to be gap agnostic. So, for example, the exposure drafts that we've published could be applied in conjunction with a company who is applying US GAAP to prepare its financial statements. But I said I was going to talk about building blocks, so let's get to that next. The biggest square, the pale grey square on the screen, is the focus of the broadest set of information that meets information needs beyond that of investors, and that can be used to meet jurisdictional requirements. The idea of the ISSB is that we set a comprehensive set of information that meets investor needs, but we know that jurisdictions may have particular information needs, and we know that stakeholders other than investors may have incremental information needs as well. In that case, the ISSB wants to work in partnership with others so that the information that we require can be added onto with the building blocks approach to meet the broader stakeholder needs in a really efficient way for companies. Moving to the next slide. One of the important situations when we might use a building block approach is in the relationship that we have announced with GRI, a Memorandum of Understanding that we announced a few weeks ago. So the GRI is focused on meeting the needs of broader stakeholders on sustainability reporting. Our Memorandum of Understanding emphasises the fact that the focus of the ISSB will be on meeting investors' information needs. GRI is focused on meeting broader stakeholder needs, but the vision of the Memorandum of Understanding is that we can work together so that the information that we require to meet investor needs could be a subset of the information that GRI requires to meet broader stakeholder needs, again illustrating this idea of a building block approach to give the most efficient reporting from a preparer perspective. And now moving on to the next slide towards talking about our exposure drafts. Now, one of the reasons why people said that they would like the IFRS Foundation to be responsible for the sustainability reporting for investors is because of our very well-regarded due process. The IASB, the accounting standard setter, is very well known for the transparency and inclusiveness of its due process. So when we established the ISSB, the trustees have decided that the same due process requirements that apply to the Accounting Standards Board will apply to the new Sustainability Standards Board. That's why you see exposure drafts out for comment in the usual manner. There is one difference though, and that's the fact that the exposure drafts have been published before we actually have a full International Sustainability Standards Board. And that's because to build on the momentum from COP26, the trustees decided that the chair and vice chair, me and Emmanuel, could have the ability to publish these exposure drafts before the board is quorate with the oversight of the Due Process Oversight Committee of the trustees. And we decided to do this because it gives us a perfect opportunity to allow our stakeholders to compare our proposals with those that were recently released by the SEC on climate and that we expect Europe to publish shortly on sustainability reporting. Moving to the next slide. So this is what the cover of our 2 new exposure drafts look like if you were to print a hard copy. Those with eagle eyes will see in the top left-hand corner that we're using the same logo that's familiar with for the IFRS Foundation. But if you've got really good eyesight, you can see that under the big IFRS in the left-hand corner is the word sustainability. When the IASB next publishes a draft accounting standard, or in fact a final accounting standard, they will issue with the same logo, but instead of sustainability, it will say accounting. Whenever you see a pale blue cover like this, that means it's the work of the ISSB. And if you see a dark blue cover, that's going to be the Accounting Standards Board. So moving on from pretty pictures and to the architecture of the sustainability requirements. I think one nice thing issuing not just 1 but 2 exposure drafts is you can really start to see the architecture of the suite of standards that we envisage that will be published by the new International Sustainability Standards Board. So on the left-hand side, you have this onion diagram. It shows the lens that will be used across our standards to frame the disclosures that are required about each sustainability risk and opportunity. We ask for information to be provided about governance, strategy, risk management, metrics and targets. And for those of you who are familiar with the TCFD recommendations, you'll recognise those 4 content elements because we've borrowed them and shamelessly copied them from the TCFD. On the right-hand side of the slide, you can start to see the architecture of the suite of standards. Our general requirements standard, which Ravi will talk about in a moment, sets out a requirement to provide information on all significant sustainability risks and opportunities. In the first instance, we then have a set of specific disclosure requirements for climate, but over time, we've built out our suite of standards and established more and more specific disclosure requirements across different sustainability risks and opportunities, and we will include industry-based requirements. Moving on to the next slide, handing over to Ravi to talk about the General Requirements Exposure Draft.
Thanks ever so much, Sue, and hello everyone. So when the exposure drafts were published, the press release said that the ISSB sets out the proposals for the global baseline of sustainability-related disclosures. It was this document, the General Requirements document, that provides the basis for that statement because it sets out the overarching requirement that an entity shall provide information on all significant sustainability-related risks and opportunities necessary for an investor to assess enterprise value. It's important for me to actually just explain the use of significant. So the use of the word significant in relation to risks that an entity prioritises for management responses, focusing on significant sustainability-related risks and opportunities rather than all sustainability-related risks and opportunities is intended to ease application for preparers while not reducing the usefulness of information provided to users as the disclosure is already subject to materiality. And finally, these proposed general features were adapted by the IFRS accounting standards IAS 1 presentation of financial statements and IAS 8 accounting policies, changes in accounting estimates and errors. Moving on to the next slide, please. The General Requirements Exposure Draft proposals require the disclosure of information about significant sustainability-related risks and opportunities. The sustainability-related financial information disclosed would be centred around a company's consideration of its governance, So how does it govern those risks and opportunities? Its strategy for addressing those risks and opportunities, its management, its risk management and how it identifies, assess and manage those risks, and the associated metrics and targets it uses to measure, monitor and manage significant sustainability related risks and opportunities over time. This approach, for those who are already using the recommendations on TCFD, is consistent with that and very much extends that approach onto sustainability related risks and opportunities beyond climate. Next slide, please. You might ask how the ISSB can ask companies to provide information on all their significant sustainability related risks and opportunities and then only propose a specific disclosure for climate. The General Requirements Exposure Draft explains what to do. In the first instance, an entity should use specific ISSB requirements. So climate document when climate is a significant climate related risk, which you would expect in most circumstances, to be frank. In the absence of a specific ISSB requirement, the General Requirements Exposure Draft proposes that an entity use, in no particular order, the SASB industry-based requirements to identify relevant industry-based disclosure topics, the CDSB materials to identify relevant social, water and biodiversity related disclosures, the materials of other standard setters that have set the requirements to meet investor information needs, and other resources such as peer practices, so as to identify sustainability related risks and opportunities and to develop appropriate disclosures. This shows how the materials that the ISSB has access to by virtue of the consolidation of the CDSB and the Value Reporting Foundation, which comprises of the SASB standards and IR, are useful to the ISSB. In conjunction, we've developed the illustrative guidance that accompany the proposals to support this thinking. Next slide, please. It is really important to focus what information the ISSB is requiring entities to provide. Sometimes people ask, what is the materiality focus? But perhaps a better question is what information needs is the ISSB seeking to satisfy? The ISSB is asking that information be provided to meet particular investor information needs. The information necessary to enable an assessment of the effects of sustainability-related risks and opportunities on a company's enterprise value, i.e. the market value and its equity and net debt. The focus is on information about significant sustainability-related risks and opportunities. The word significant was added as a result of outreach undertaken by the Technical Readiness Working Group, where it was apparent that companies were worried that they were being asked to do an exhaustive search of all possible sustainability-related risks and opportunities. The word significant is included to provide confirmation that the focus is on the things that really matter to an enterprise value. Sometimes when we say that we are focused on investor information needs, consistent with our sister organisation, the IASB, people think that means the focus is way too narrow. In particular, some are concerned that this excludes information about the effect of a company on people, the economy, and the planet. That really isn't the case. When a company's effects on people, the economy, and the planet affect enterprise value, then it is within the scope of the ISSB disclosures. And I'll just give you an example here. So if a company has a poor reputation as a GHG emitter that is likely to evoke regulatory action when it could affect the business model, or it can have reputational effects, consumers are increasingly interested in how companies behave when deciding when to buy those products. That has an effect on cash flows. And in addition to that, from a social inequality perspective, there may be modern day slavery issues within an entity's value chain, which could have some reputational damage, impact the consumer demand on the entity's products, and once again affect an entity's cash flows. Next slide, please. So in summary, the General Requirements Exposure Draft also sets out a couple of other important things. Firstly, it emphasises the importance of the package of information provided to investors by emphasising that linkages in information both within the sustainability related disclosures and between those disclosures and the financial statements should be apparent to investors, and that when relevant, assumptions should be consistent. It aims to bring sustainability reporting into the mainstream by requiring that financial statements and sustainability disclosures be provided at the same time. This is important, for example, to facilitate assurance of sustainability disclosures. And in order to support global adoption of the General Requirements Exposure Draft, it proposes that the sustainability disclosures be provided as part of general purpose financial reporting, but we do not dictate a specific location so as to reduce the risk of being inconsistent with specific jurisdictional requirements about the location of the information. And it allows that information beyond that required by the General Requirements Exposure Draft can be provided within the sustainability disclosures, as long as this does not clutter or obscure the information required by the General Requirements Exposure Draft. This is designed ultimately to enable jurisdiction-specific disclosures to be collated with those required by the ISSB. I'm now going to hand over to my colleague, Brian, who's going to take you now through the climate exposure draft. So over to you, Brian.
Fantastic. Thank you so much, Ravi, for that great setup and overview of the General Requirements Exposure Draft. So once again, my name is Brian Esterly. I'm thrilled to be here on this journey in the launch and early days of the ISSB, working closely with Sue and Emmanuel, Ravi, Marty, the ISSB technical staff. As I hope you can all see, while it's early days, only a matter of months into the ISSB's formation, we're thrilled with the progress that's been made so far and the release of these two extremely important exposure drafts only last month for this comment period. I'm going to go into just a bit more detail to give an overview specifically on the climate exposure draft. So at the highest level, the climate exposure draft is proposing requirements for the disclosure of material information about significant climate-related risks and opportunities. Putting this in the context that Ravi just shared on the role of the general requirements exposure draft, in that proposed standard is broad and it's overarching. When it comes to climate-related risks and opportunities, a preparer would, one, need to comply with this climate exposure draft, but it also sits underneath the general requirements and would help comply with those broad general requirements for any climate-related risks and opportunities or climate-related information. A bit more in summary, the climate exposure draft incorporates the TCFD recommendations. It also includes the SASB standards and specifically the climate-related aspects across the full body of the SASB industry-based standards. I'll expand on this a bit more in a subsequent slide. And then, similar to the earlier comments from both Sue and Ravi, the climate exposure draft is very much structured in a manner based on the TCFD, as well as incorporating these TCFD recommendations. And one of the implications of that is that much of the climate exposure draft revolves around physical risks. So those could be acute risks, those could be chronic risks. It revolves around transition risks, and then very importantly, climate-related opportunities. Next slide, please. In a bit more detail, the climate exposure draft is proposing for information that enables investors to determine the effects of climate-related risks and opportunities on the company's enterprise value. Information that enables investors to understand the company's response to and strategy for managing its climate-related risks and opportunities, as well as information that enables investors to evaluate the ability of the company to adapt its planning, business model, and operations to climate-related risks and opportunities. I would very much encourage the audience today to in reviewing the climate exposure draft to really zero in on the strategy section. Really, the entire exposure draft is important, but the strategy section is where we start to go into more detail in really incorporating these TCFD recommendations and laying out much more specific disclosure requirements that accomplishes these objectives. So once again, at a high level and consistent with the general requirements exposure draft, our focus here is that the exposure draft is focused on significant climate-related risks and opportunities. And importantly, information provided must be material for assessments of enterprise value. So the assessment, the management judgment around materiality continues to be a critical aspect that needs to be applied to the various disclosure requirements in the climate exposure draft in the same manner as the general requirements exposure draft. Next slide, please. Building a little bit more on the earlier comments around TCFD and the SASB standards, really, if I leave you with one takeaway here on the climate exposure draft, what the ISSB is essentially doing with this proposed standard is bringing together the TCFD recommendations with the SASB standards. So we have fully incorporated the TCFD recommendations, and in many cases further refined, further clarified, possibly further built out the TCFD recommendations. Those recommendations then, really an integral part of the disclosure requirements in the standard, are broadly applicable to all companies, where then on the other side, we have also incorporated the SASB standards, looking across the entire body of the SASB industry-based standards. We've incorporated those aspects of the SASB standards that are related to climate. So very importantly, this is a major development from my perspective. We're bringing together more of the kind of top-down, broadly applicable approach established by TCFD, and we're also bringing the SASB industry-based approach into one cohesive climate standard. So really exciting development, kind of bringing these two worlds together to create one comprehensive, cohesive climate exposure draft. One last comment on the SASB standards that I would encourage folks to pay particular attention to, especially for those that may be familiar with the SASB standards. There are only two areas where there are proposed changes relative to the existing body of SASB standards. The first is there are a number of proposed changes to improve the international applicability of a number of the metrics throughout the SASB standards. So for example, possibly some metrics that previously had some sort of a jurisdictional limitation that relied on a specific regulatory definition that only exists in one jurisdiction, as an example. We think this is a very positive step forward to produce an internationally applicable standard. The second area is there are new proposed disclosure requirements specifically for the financial sector, a group of industries within the financial sector around financed or facilitated emissions. This is an area where we are particularly interested in feedback from the market, especially those investors or corporates that are interested in or participate within the financial sector. Next slide, please. Just commenting on a few of the key features, and this shouldn't surprise those of you that are familiar with TCFD, is the exposure draft includes disclosure requirements around transition planning. So while we're very much focused on what are those significant climate-related risks and opportunities that your business, that the preparer is exposed to, and how are you managing those, there are also disclosure requirements more broadly around a transition plan. So that can include aspects such as emissions targets, how those targets are established or who oversees those targets, what the timeline is, what metrics are used that feed into such emissions targets or other types of climate-related targets. It also includes aspects around carbon offsets to help investors assess the use of carbon offsets in a transition plan or in emission targets, the credibility, the type of carbon offsets, etc. Another aspect is around climate resilience, or really the resilience of the preparer's strategy and across multiple scenarios. So this gets into the positions the ISSB took on scenario analysis or other techniques and tools used to assess strategy resilience around climate. Importantly, there are also disclosure requirements for preparers on Scope 1, Scope 2, and Scope 3 emissions, very much modeled after, largely based on the GHG protocol, with some key enhancements or modifications. But importantly, the expectation, really the requirement, is that preparers disclose Scope 1 and Scope 2 and Scope 3 emissions. Next slide, please. And I believe I'm passing it back over to Sue here.
Thank you, Brian. So exposure drafts are out for comment for 120 days. So that means that you've got until the 29th of July to send us your comments and tell us what you think about our ideas. We're really keen to hear from you. The quality of what we do is very much influenced by the quality of the input that you give us to help us in our decision making. To try to facilitate lots of responses from you, we are asking for comments to be received in two different ways. One is a traditional comment letter for those of you who are used to responding to Foundation's consultations, but also this time we are allowing for electronic surveys to be filled out. Exactly the same questions, whether you send us a comment letter or a survey, so only need to send us one, not two, but we would love to hear from you. And the more you don't have to answer all of the questions in the document, but if you could answer specific questions, that really helps facilitate the analysis. But whatever works best for you, that would be great. And then moving on to the next slide and just touching on a few other things that you can expect from us beyond the exposure drafts. So the first thing to note, and I didn't mention it in the slide, even though it was on the bullet points, is that right from day one, the new board wants to think about the digital consumption of the information required when you apply the standards. So we're already thinking about a digital taxonomy to capture the information provided in the sustainability related financial information. In May, we're expecting that the staff will put out some proposals for your comment, a request for information, a staff document, really asking some fundamental questions about the structure of the taxonomy that should be used to capture the IFRS sustainability disclosure standards to help us with our thinking before the board puts out an exposure draft for comment at a later date. The second thing to note is the SASB standards. As Brian said, we're working with the SASB standards as a result of the upcoming consolidation with the Value Reporting Foundation. And we have recently confirmed what that means for the ISSB. What that means is that we're taking on responsibility for the SASB standards from the date of the consolidation, and not just maintaining them, but working to enhance and build on those standards. And one thing that we will do right from the start is working on improving the international applicability of the SASB's industry-based standards beyond climate. As Brian mentioned, we have already done some work improving the international applicability for the climate-related disclosures in the climate exposure draft. We'll move on to the other metrics as the next phase of this international applicability project. Then the last thing I'll mention, last but certainly not least, is that later in the year, we will come and ask you what you think we should work on next and what our priorities should be. For example, we'll be asking what other topics or sustainability matters you think are important for the ISSB to work on, and also how we should advance the development of the SASB's industry-specific standards. So please look out for that document, because it will be really important for us to make those decisions about our work plan based on what's important to you using our standards. And with that, I think I'm handing us back to Marty.
Thank you, Sue. And I'm not going to let you off the hook that easily, because obviously there's a whole lot of questions that have come in. So thank you very much, and please do keep them coming. So Sue, I'm going to jump off the bat with probably one that you're expecting, because it's a topic that we get asked every time we speak. What is the relationship between the ISSB's work and the work of the SEC and EFRAG?
Good question. And so, as I mentioned, when I was talking about the exposure drafts, one of the things we're actually really pleased about is the fact that we've managed to get the exposure drafts out, thanks to the work of people sharing the webcast with me and others, in time for our stakeholders, not only to look at our proposals, but also to look at the SEC's proposed climate rule and also the sustainability proposals that IFRAG is expected to publish, I think, in the next few days. And so we are really encouraging you not only to look at our document, but to look at those documents as well. Now, why do I care about what you think about the other documents? I care for a couple of reasons. One is because the SEC has asked a specific question about the use of our standards in the US for all companies, but foreign private issuers in particular. So really keen for people to look at that question. But more generally, the closer we can get our proposals together, the more likely we are to get this global baseline idea to work. And the more likely we are to get the ISSB standards to be a good basis for the building block, assuming that the SEC and Europe would want specific disclosure requirements over and above what we might do. So what are we doing to facilitate that? So we've already been spending quite a lot of time with our friends in the US and our friends in Europe talking about the work that we have been doing. But just yesterday, we moved toward formalizing that relationship a little more. So yesterday, those of you who watch our work with eagle eyes will have seen that we published this information to say that we're establishing a jurisdictional steering group. And that group will include a number of representatives from a number of countries, including from the SEC, IFRAG and the European Commission, but also others. And the task of that group is really to get together in a room and to talk about our respective proposals and brainstorm about ways to bring them closer together. So we're working really, really hard to see if we can bring our proposals closer together. But if you could give feedback to us, the SEC and Europe about your thoughts on bringing our proposals closer together, that would be really helpful as well.
Thanks, Sue. Now, Brian, I'm going to come to you next. If the ISSB standards combine TCFD and the SASB standards, will companies be required then to report disclosures for all three entities, ISSB, TCFD, and SASB?
Well, the really exciting point, kind of calling back to Sue's earlier remarks on the big picture and how we got to where we are today, is what the IFRS Foundation and the ISSB is driving towards around consolidation and really simplification of the sustainability reporting landscape. So speaking from the Valley Reporting Foundation perspective, or the SASB standards, or the IR framework, we're thrilled to be a part of this journey, to be consolidating into the IFRS Foundation, to be playing a role to help the ISSB quickly advance its standard setting work moving forward, and really the way in which the ISSB is leveraging and incorporating not just the SASB standards and the IR framework, but broadly speaking, the CDSB framework, the TCFD recommendations, etc. So the ISSB, or more broadly, the IFRS Foundation, has really listened to what the market has said here in the prior consultation on the need for consolidation and for further simplification. And that is exactly what we are driving towards here today. And we hope you can really see the results, including the recent consolidation with CDSB, and in just a matter of a couple months here, the formal close of the consolidation with the Valley Reporting Foundation. So there will be some transition period where, picking up off of Ravi's earlier comments, we're very much encouraging preparers to continue to use the SASB standards as an example. They have a constructive role with general requirements to help in this transition, help set the stage for the ISSB's work going forward. But where we're going is really, in some sense, taking some acronyms off the table and really simplifying, consolidating the landscape in the spirit of Sue's comments around driving towards a global baseline. Same comments hold true for TCFD. This is one of the many reasons why we thought it was really important to fully incorporate the TCFD recommendations, not just because of their usefulness in the actual disclosures and their widespread market uptake, but also this helps with the further consolidation and simplification. So that's why we're really directing stakeholders towards ISSB as establishing the global baseline, which will be really constructive for further simplifying this space moving forward.
Thanks, Brian. Super clear. I think there's going to be no report preparer out there that doesn't think this is a good step forward, is there? Now, Ravi, I've had quite a few questions come in about the difference between significant and material, with one just saying it all just feels a bit confusing to me, to be honest. Can you make that a bit less confusing for our listeners, please?
Yeah, of course. And sorry that it is confusing, but hopefully this will help to unpick that. So when we were developing the prototypes, which were released late last year in COP26, they were developed by a group, by the Technical Readiness Working Group. And by that outreach engagement, companies were a bit scared by, by the potential ramifications of disclosing all sustainability-related risks and opportunities. What we're really after is the significant ones, which a company is managing on a, managing and assessing, and those significant sustainability-related risks and opportunities, which could have an effect on the assessment of enterprise value by an investor. So hopefully that's clear. The materiality approach which we've taken is very much consistent with the sister organisation, ISSB, and the significant approach is very much just to help companies think about, those significant, those sustainability-related risks and opportunities which they're managing. So hopefully that's helpful.
Thanks, Ravi. Now I'm going to come to you, Sue. Can you give us a bit of there's quite a few questions around how the GRI standards will fit into the ISSB standards work. Would you be able to go a bit more detail into the current sort of work program we have with GRI?
Sure. So the basic thing that we're trying to do there is really, I think, twofold. One is if you look at a sort of, disclosure requirement level, if you like, starting at that level, we'll be looking at opportunities where we can identify a piece of information, if you like, that could be used both to satisfy investor needs and the needs of a broader group of stakeholders, and trying to identify commonalities so that then GRI could add on, sort of building block approach again, if there's incremental needs, but trying to streamline as much as possible to meet, two information needs with one piece of information wherever we can. That's sort of the objective of our work. The other thing that we'll be trying to do, which sort of facilitates that, but is sort of separate, is trying to find ways to align the work that we're working on so that we're thinking about similar issues at a similar time, if possible, again, to facilitate this idea of trying to find commonalities and information needs. So in a nutshell, that's the sort of two main streams that I see.
And just while you're there, Sue, we've got quite a few people asking when will these standards be finalised. Could you elaborate a bit further on that as well, please?
Oh, geez, we've just got these exposure drafts out, guys. As soon as possible is the short answer. So the comment period ends in July. We need to work hard on, reading all of your wonderful comment letters and working about what to do, what we need to change, what we can improve, what's good as proposed, finding ways to further align with jurisdictions, and then wrapping it all up. And so we hope to get as much of that done this year is our objective. And we're hoping to have, in particular, our quorate board in place and time to begin the redeliberations once we have the comment letters in and we have the analysis ready. So that's our overall sort of plan that we're working towards.
Thanks. And Brian, Ravi, I'm not sure who would like to lead with this one. I have quite a few questions in about assurance of these new standards and what should be taking place, when it should be taking place, if it should be taking place, how. Could I ask you gentlemen, please, to jump in on that one?
Happy to take a stab, Brian. And yeah, so with regards to the ISSB disclosures, the intention is for the information that is provided by an entity when they're disclosing material information to investors on sustainability related risks and opportunities is for the information to be verifiable. So we're very much have, that's at the centre of some of our thinking, but we can't develop, those assurance guidelines, but we do have very strong relationships with important bodies which do, such as the International Audit and Assurance Standards Board, the IAASB, ISSB. They very much have developed audit standards for financial reporting, and via our close relationships with them and other bodies, we look to do very much the same from an ISSB perspective. And why is this important? It's important for the following reasons. One, to create comparable, clear and consistent information that really, from our perspective, is enhanced when, the information is verified for so that investors can, really rely on the information for decision-making purposes. Brian, over to yourself.
Great, fantastic response, Ravi. Fully agree. I mean, it's really important for the ISSB to constantly think about verifiability in setting standards. And so that's just as important for these exposure drafts, one among many areas where we would encourage comments from stakeholders. And then when it comes to implementing insurance, really largely a jurisdictional and regulatory question. And we know more broadly beyond that, many companies have sought some form of assurance, even limited assurance for aspects of sustainability disclosure. So it's a really important topic. It's an important topic for standard setting. It's also an important jurisdictional or regulatory question for jurisdictions around the world. But fully agree with how Ravi laid it out there.
Brian, while I've got you talking, 2 questions on the SASB standards directly. Will the SASB designation be managed in the same manner going forward? And should there be greater consistency of industry-specific based disclosure topics to ensure comparability between different industry economic activities?
Yeah, Marty, can you repeat the first question? I didn't quite catch that.
Yeah,
sorry.
Sure I can. Will the SASB designation be managed in the same manner going forward? And I'm just going to assume that's the classification of the industries. But maybe
great. Yes, so historically how this has worked with the SASB is that it is the SASB board that oversees that industry classification system. And really how we drive stakeholders to think about that is the industry classifications establish the applicability of the disclosure requirements. So we're not saying that, either investors need to use the system themselves necessarily, or corporates need to, embed that system in various processes and whatnot. It really is each industry, each definition or the scope of each industry, it lays out the activities, the corporate activities that are covered within that industry in order to say, if you're a company that conducts these activities, these disclosure requirements apply to you. So it's really just meant to be a useful tool to apply the set of disclosure requirements to the business model at hand. The short answer is that because the ISSB is taking over the governance and ownership of the SASB standards upon consolidation in just a couple of months here, that yes, the ISSB would oversee the SASB industry classification system. So I hope I'm answering the right question there. And
I think you've got that one, Brian. I think you've got that one. Thank you.
Good. And so just briefly on the second question, this consistency between industries. So when you have a significant sustainability risk, or what we would call within the SASB standards, a disclosure topic, it's constantly a question for the board around consistency with other industries that might be exposed to a similar sustainability risk. So there may be 2 very, water intensive industries. And so it's a question for the board in its standard setting around how much to really tailor the metrics, tailor the disclosure requirements specifically to that industry, or could there be benefits by broadening, going to a bit of a higher level in order to have more of broad comparability and consistency with other industries that are faced with similar types of risks. So the answer varies. In some cases, the board has determined that it makes a lot of sense to really be specific to the nature, the characteristics of that industry. That's how one can get to the most decision useful information. In other circumstances, the metrics may be kept at a higher level, more of a broadly applicable level to get those benefits of further comparability beyond an industry. The answer varies. It's really a standard setting question. It's a conceptual question. It's a technical question, but one that's constantly quite frequently on the table and important with this industry-based approach to standard setting.
Fantastic. Thank you. Very comprehensive, Brian. Now, Ravi, I'm going to come to you next. And this one has come up a few times this afternoon, UK time, but didn't come up this morning in the just under 200 questions I got. So I really want to make sure we get to this one. There is concern as to whether certain disclosures can be accurately determined in the same time frame as releasing financial results. Currently, ESG reports and sustainability reports are released up to 4 months after the annual financials. Will there be flexibility to release later, as it will take time to build processes to collect accurate information this quickly?
Yeah, that's a fantastic question, and it's something which we're looking forward to, receiving comments on. In fact, I always want to prepare it. It takes time to put in the processes and disclose the information in accordance with the financial statements. However, what we're striving at here is to really mainstream sustainability related financial disclosures and make them on a par with financial statements. As Sue and Brian have articulated before me, there's a big demand for this from the likes of jurisdictions and the capital markets as well, for this information to be beyond level pegging. So I do think there will have to be there may be some jurisdictional nuances on how this plays out going forward based upon the uptake and the capacity building for companies to really scale up and deliver such disclosures with the same frequency as financial statements. But I guess this will play out over time, but we do welcome comments on this particular area. Thanks ever so much.
I had a comment, Marty. I agree with everything that Ravi said, but I've had quite a few questions on this. So one thought that I've had when I've been asked this is that I know that it's quite a big change for the reasons that you give, and I know that there's particularly as people are getting used to reporting on this type of information, it can be quite tricky compared with some of the stuff that we're used to doing preparing financial statements. So one thought that has struck me thinking about this more and listening to people is that we're very interested to understand whether there's particular, what things would require a longer lead time for the application of these standards. So we're asking for information about, what the effective date should be and what it is you need to get done in order to meet the requirements. If people want to make particular comments about this sort of timing alignment point and the consequences on systems and stuff and what that might mean, that would be really helpful. And actually in the climate document, but not in the general requirements document, we say, are there any particular requirements in here that you might be able to do earlier or later than others? If it were the case that maybe people could apply the requirements earlier with a timing disconnect, maybe allowing more time to, change systems so that ultimately there was an alignment of dates, I think that would be something really interesting for us to understand.
Thanks, Sue. Now I'm going to come to Brian again, please. Now, Brian, this one has also come up a lot this morning and this afternoon. So but we didn't answer it live this morning. So I'm going to lob it to you. Are Scope 3 emissions mandatory only if material, like the SEC rule for all companies? Does the ISSB draft prescribe a methodology for calculating Scope 3 emissions? Also, are scenario analysis mandatory disclosures for all size companies?
Yeah, very, very important question. And it was even just in another investor presentation this morning with the SEC talking about both the SEC proposal and the ISSB exposure drafts. And so this is coming up very, very regularly, which might not surprise anybody on the line. Importantly, as Ravi laid out in general requirements and consistent with the climate exposure draft, materiality is a really important concept. The materiality assessment and the materiality judgment in applying these standards. And so that assessment and that judgment really applies to all the disclosure requirements in these exposure drafts. I think that's the starting point. So the same holds true with Scope 3. I think this is This is an important conversation and really educational journey that needs to keep taking place, though, around informed materiality judgments and assessments everywhere, but especially in an area like Scope 3 that can be extremely complicated. Just a bit more around Scope 3. We have a consistent approach proposed in the exposure draft with the GHG protocol. So again, at a starting point, Scope 3 is a disclosure requirement. The requirement is modeled after the GHG protocol, the various categories, the types of Scope 3 emissions. That materiality judgment would apply to that Scope 3 disclosures. I would further comment on this as well in the climate exposure draft around the industry-based aspect of this, where quite a number of disclosure topics coming from the SASB standards directly relate to business risks or opportunities connected to Scope 3 emissions. So in many circumstances, depending on the business model, depending on the industry, there may be additional or very related metrics or disclosure requirements that are connected to or support Scope 3 related information. I'll call back to one earlier point as well, which is really important in the financial sector, around how the exposure draft includes proposals around financed or facilitated emissions. So one of the major areas in Scope 3 overall, but especially for insurance companies, for banks, for asset managers, investment banks, et cetera. And so we do have a set of specific proposed metrics related to financed or facilitated emissions within the financial sector that, again, is designed to be supportive of and consistent with Scope 3 disclosures and really connected to materiality judgments and assessments that are made by a preparer in determining the appropriate set of disclosures to make. So certainly a big topic, Marty. Not enough time to get into all the details here, but appreciate the question.
Oh, you never get a session without a Scope 3 question, Brian. I couldn't let you get away with that. Now, Ravi, a really quick one for you, then I've got a quick one for Sue just before we finish. Rav, can you talk a bit about how these disclosures will link to financial statements, please?
Yeah, of course, very important question. So within the actual general requirements, we talk about the importance of connected information. So if an entity has made a strategic commitment to actually get out of a particular industry, what are the actual financial costs associated with that? They can very much connect that and make a cross-reference back to the actual financial statements where there's a particular disclosure on that. So and there's also the consistency of what I mentioned as well, especially within the actual general requirements where we have general features, which importantly builds upon the IFRS Foundation's IAS1, the presentation standard, but also IAS8 as well. So for accountants out there, there is consistency. It has the look and feel of the IFRS standard, but also it does make the necessary important connections back to the financials where possible. But most importantly, it doesn't change the requirements of disclosing financial statements. So I'll hand over back to yourself, Marty.
Okay, so we're getting this quite a lot, and this is just a lot of fun. So I'm going to send this one to you. I'm getting lots of questions about when the ISSB standards will be ready to be played with, when they can go out to the market, and when the taxonomy that sits alongside that will be available too. Do you want to take that one for me, please?
Well, we're hoping to get them done as soon as possible, right? So we're hoping that by the end of the year, if all of the planets align and people like our proposals, that we can get these standards finalized. But in terms of the taxonomy that goes with it, what happens with the taxonomy is that it's really important that the taxonomy just strictly captures what's in the standard, doesn't adjust the requirements in a digital form. So what the ISSB will do, consistent with what the IASB does, is once we finalise the standards, then exposure drafts will go out with the proposals for the taxonomy. So they'll be subsequent to the standards themselves. But that's usually okay because it allows the implementation period before you actually need to do the tagging, etc. So it can still line up for, timely digital reporting.
the end of this year, Sue. Keep your eyes out and cross your fingers, ladies and gentlemen. But
That's
first,
objective.
we need all your feedback, right? First of all, we need your feedback. But thank you, Brian. Thank you, Ravi. Thank you, Sue. That was thoroughly enjoyable to chair. And we're at time, so you're all very welcome to log on to the website tomorrow and watch the first and second sessions of this again today. Pick up on any other points. You know, if today's session wasn't enough for you. As I've said, the recording and slides will be on the website tomorrow. So on behalf of the IFRS Foundation and the International Sustainability Standards Board, we'd like to thank you for your ongoing support as we build the global baseline for sustainability disclosure. And a personal thanks from me for taking the time out of your busy schedules today to join us, and for all of your fabulous questions. We couldn't even get to a fraction of them. They were truly great, and there were so many more there. So if you haven't done so already, please make sure you sign up for the alerts so you can keep in touch with us and we can keep in touch with you. It's been an absolute pleasure to chair this today, and thank you to our fabulous speakers. You guys are rock stars. Enjoy the rest of your day, everyone. Thank you and goodbye.
Thank you. Bye-bye.